the psychology, of it is overcoming the fear. What is scary? What is more scary? Or what is less scary? And overcoming that fear of either failure from an ego standpoint, which is I don't know how to cope with not being able to accomplish something, to, well, what if this doesn't work? And what happens then? Like, what happens to me personally, or what happens to my family? And kind of addressing those fears head on, and having that system around you to get you past that is to me that's what's worked for me to take this risk at this time.
Welcome to Deal Flow with me, Michael Pulio, the go-to destination for private equity and real estate professionals, including institutional investors, sponsors, and market experts. Each week, I talk with industry insiders on everything real estate, capital, and prop tech. Today, we're excited to have 𝐬𝐮𝐬𝐜, a leading figure in commercial banking with over a decade in the industry. Ian has specialized in providing comprehensive financial solutions across key urban centers in Greater Washington, Maryland, and Northern Virginia. His strategic financial oversight has made a significant impact in the commercial landscape throughout the region. Ian recently has made the transition from W-2 to entrepreneur with a focus on hospitality development by leveraging his experience not only in specialty finance, but also engineering and construction management. Ian, thank you for joining us today.
Thanks for having me, Michael. It's great to be here.
Yeah, I'm excited to have this conversation. Maybe I know I gave you a little bit of a background there, but maybe if you could just, in your own words, bring people up to speed on kind of your career and then what you're focused on today.
Sure. I started my career in construction because I studied civil engineering in college, and thought of civil engineering at the time as just doing more homework problems, which didn't sound that exciting to me at the time. I wanted to be a little bit more where the action is. So I went into commercial construction and focused on that for a good 5 years or so. But one of the things that stuck in my mind from college was a business course that I took in the last semester. And when I took that course, I just really loved it. And so I thought in the back of my mind that one day I would go back and get an MBA, which I did after about 5 years in commercial construction. Through my MBA, I had my sights set on real estate development at the time. But to my surprise, I really wasn't able to make that work at the time. It proved more difficult to get in on the ground level in real estate development, and I also at the time didn't have the confidence to kind of push through. So I actually backtracked a little bit from that desire and took a job in commercial banking. The thing that attracted me to commercial banking was actually getting a diverse experience working with a bunch of different companies and helping them create jobs, helping do things to help them build their companies. And that sounded very interesting to me at the time. And so I went into commercial banking right after graduate school.
Mm-hmm. And then after graduate school, kind of what happened after that? You were in commercial banking for, I imagine, quite a while. Maybe tell us a little bit about your experiences there and then kind of what you're focused on, now.
Sure. I was in commercial banking for 18 years and worked for two banks during that time. The first experience I had in commercial banking was actually in the not-for-profit sector. So coming out of grad school, I was offered a job in the not-for-profit group with a commercial bank in the Washington, D.C. area. And it sounded very interesting to me, getting to help not-for-profit organizations succeed and build. And one of the main customers I had in that role were public charter schools, and I helped finance public charter school development. So this was kind of the beginning of my experience in special and specialty commercial finance. From there, I transitioned over to the healthcare group, and in that group, my clients were developers of senior living. So for everything from senior living housings, apartments, independent living, assisted living, and even nursing homes. And so then another very interesting experience, specialty finance. Through that, I did some very interesting projects and got to utilize my construction and engineering background kind of to be able to speak the language with the developer, the client, as well as understanding the appraisals that came back, specifics of the project, some of the challenges they had during construction. That was super helpful at that time. And those projects are very specialized, and they utilize market studies. And so I learned how to read market studies and determine whether or not it was a good risk for the bank to take to make a $20, $30, $40 million construction loan that was reliant on becoming a cash flowing property after the fact. A lot of these developments were in areas where there wasn't necessarily comparable to go back and look at. And so we really had to rely on the relationship with the company or the customer. It was very important, believing in them and their vision for what was going to be done there and the end product, as well as market data, as much information as we could get, even though limited, to make a informed decision on a loan like that.
If you're enjoying the insights and expert discussions on deal flow with myself, Michael Pulio, hit that follow button on Apple, Spotify, or wherever you listen to podcasts. By subscribing, you'll stay up to date on the latest in private equity, commercial real estate, and structured finance, and you'll never miss an episode. Plus, if you find our content valuable, we'd love to hear your feedback. Please leave us a review so we can continue bringing you insider conversations with market experts. Thanks for tuning in. And so primarily your experience through today was in these specialty finance realms where you were focused either in nonprofit or a lot of these, hospitality type opportunities, a little bit different, maybe client, like where, like you're saying, it's a nursing home, you have, the client ends up being that individual who's moving to the nursing home or the family that's bringing their parents or whatnot. But still hospitality, right? Still, providing a customer experience that is unique, that makes people feel comfortable that they're going to, bring their family members into that community, either as assisted living or if it's a nursing home. And so a lot of interesting experience there. And you had said that was about, 18 years ago that you had kind of entered into first the nonprofit space and then the healthcare hospitality space. Less data available then, I imagine, than there is now. So a little bit more opaque as it relates to, will the demand be there when the project is done? Maybe could you speak to that a little bit about, how your bank is able to get comfortable, or how banks generally are able to get comfortable with these new development projects in their areas, given that it is sort of a, if you build it, will they come sort of scenario versus an existing project where you kind of know, hey, you're going to go up, current revenue up 20%. And so I've got a good sense of forecasting cash flows and feeling good about my debt service. You're relying on a market demand that, is hopefully there, and then hopefully a market participant who's going to take out that loan on the permanent side. So, a bit of a risky part of the life cycle. Maybe you speak to that risk tolerance or how you guys made those decisions in that time.
Our job was to mitigate risk. As a banker, you mitigate risk and you analyze risk. Those projects, building a assisted living facility, building an independent living facility, or building a nursing home, it's all about understanding what those risks are and mitigating. The number one way to mitigate risk in any commercial financing project is the relationship. I'm a big believer in that. And knowing the people who are behind the project, their history, their background, their experience, whether they will stand behind the project if something were to go wrong or to need more equity infusion, or whether they will hand you the keys and walk away. Banks lose money when they get the keys. Like there's not a situation where the bank takes over a property or a project, a property, anything like that, where they make money by a defaulted loan. And so having the people behind it is number one. Number two, and a close second, is understanding that market. So in specialty finance, whether it was senior living or even what I'm doing today, it is understanding, is the market there? What factors do you have to make an educated decision on whether or not to move forward and take that risk? With senior living, it was relying on the third party to perform a market study where they look at the competition. They look at the number of individuals of a certain age that will be aging into the population that you are targeting for your senior living facility. And it is understanding the credibility of that market study provider as well. So again, it's another relationship and another outside person that you as the at-risk party, as the bank or the financer, have to get comfortable with. And looking at those patterns that you see in the market study and really believing in that, those are the most important things that I saw, and the decisions that we made were based on those factors coming together. Sometimes there were difficult conversations that had to happen with customers that you have for a long time if there was any sort of friction around that information. And oftentimes, as I'm kind of understanding now, going to seek financing for my development projects, the bank is kind of a third set of eyes. And so you have your own intuition, why are you there as the developer? You have a market study that you get from a third party, but the party that's really going to be at risk, being that bank, is another set of eyes to help you understand what level of risk you're taking as a developer with your own equity being put on the line.
Yeah, no, I think that's a good point. I think we can kind of shift to a little bit more about what you are doing today, and how you're bringing some of that risk mitigation and market knowledge to the other side of the balance sheet, right? So you're at first you're kind of evaluating risk, and all the bank as a banker, the lens is you're trying to mitigate risk, and you don't have any upside, right? Like the best you can do is get par plus your interests. Right. So there's, you really want to mitigate that risk because you don't get to ride that equity wave that the sponsor gets to ride in their position. So now that you're shifting from, someone have shifted from someone who is sitting on the debt side to someone who's sitting on the sponsor side and has a sponsor case versus maybe a bank case, can you maybe speak to how that changes things for you when you're thinking about a deal or an opportunity? That and how are you able to bring that old perspective to the table to hopefully convince the banks that hey, the risks are mitigated here, I know what I'm doing, and they're going to stamp approve on that, assuming that was, I don't think that's really happening anymore. I don't think anyone's actually stamping approval on paperwork anymore, but when you're getting that committee approval, how do you think about that now on the other side of the table?
I think you just had a good idea there that I should request for my first loan for my first big development that I actually get something that's stamped approved, just so I can frame it and put it on the wall. So I'm going to request that at closing. But to answer your question, shifting to the other side of the table it's been really interesting and really fun. The first thing I have told any bank or financing partner that I am pitching to is I've been a banker, so you can talk to me like I know the terminology, I know the language, I know the ratios, I know all of that because I did it for 18 years. So that being able to say that is just very disarming to the banker on the other end. I've been there, I've been on the other side and had to explain to a borrower every last detail of why I'm asking for a certain piece of information or why we have a debt service coverage ratio. What does that even mean? So I have to explain all of that, and it's just extra work for me as a banker. So the first thing I'm doing in those conversations is I am taking work and worry off of their plate. It's everything comes back to relationships. So now I'm building a relationship with this banker, and the first way I do that is show them that they don't have to work very hard to work with me. Let's take the education of me as your customer and how it all works off the table because I know how it works. And let's focus on the details of my request and my project and why I believe in it and why my partners believe in it. And let's see what you need to understand in order for you to believe in it, or at least give us an answer that you don't want to be part of this or you do. And so I've been able to start there. And that's been a good start for these conversations. And being able, the other component that's been very important is actually understanding what to present. And so with my knowledge of being on the other side of the table, I've put together a 15 to 18, slide deck that actually shows what I'm doing, where I'm doing it, why I'm doing it, and what risks I've identified and what risks that I've mitigated through certain aspects of the project or certain data that I've collected and am presenting. And that being able to have that experience all the way back to construction. So I, can speak the construction side of things, and I can speak the financing side of things. And where I can't speak to something, I have been able to identify really strong partners. So on the design side, I partnered with a great firm called 𝐬𝐻𝐶, and 𝐬𝐻𝐶 is helping inform us of the design. And so that is not an area of expertise of mine, but now they are a partner on the project. And so the first page is me. It's the designer, it's the builder, it's my finance team, and it's my operations person. And comments I've gotten so far are, wow, you really built a great team. And so, being able to show that to a potential lender is really helpful right up front. The people behind it, again, going back to my experience, what was I thinking when I was making a loan? It was, who's across the table from me? Do they know what they're doing? Do they have the experience? Are they fully dedicated to this project? And do they have, the financial wherewithal to step in if needed, to fix a gap that might, that inevitably occurs, right? No, nothing plays out exactly as planned. And so that's where friction arises. And do I believe the people will step in and help and have the wherewithal to do that? So building that relationship with the bank from the front end, showing them the experience, moving into the reasons that, we're performing or doing the project that we are. And then, rounding that all out with a very strong and sound, financial analysis of the project. That makes for a good presentation and a warm reception. Whether it aligns with that financing partner's goals and objectives and risk tolerance, that's to be determined down the road as they look at things. But on the front end, making a good first impression is really important.
Yeah, no, I think there's a lot there. I think you mentioned that you put together this kind of a package slide deck that gives the people an overview of what you're doing. Wondering if, just to take a step back, could you give us like a 2 or 3 minute version of that slide deck, a little bit about, what are you looking to tackle? You talked a little about team and partners, but what types of projects are you looking to tackle? What's your thesis? What are you out there looking for, just so that we have a sense of that and we can talk a little bit about it.
Yeah, I can tell you what kind of drew me to this whole industry to begin with. And that'll go right into why Berkeley Springs, West Virginia, why now, and what we're doing. I have always wanted to be an entrepreneur. My grandfather, who I was very close to, was an entrepreneur by force. He was an orphan at a very young age, and sorry, he joined the military, went to college, first in the family to go to college, came out of college, and was a traveling salesperson, but he had a condition that, psychological condition that he had a fear of traveling. And so it's a tough spot to be in for a traveling salesman. And he traveled and sold pianos. And so he, after doing that for a while, he decided he didn't want to travel anymore. He partnered and opened a piano store. He was an entrepreneur. He was a big influence on my life, and he always wanted me to do something safe and secure. My mom, on the other side, was much more of a free spirit and always wanted me to try new things and experiment and take more risk. And so I realize now, looking back, a lot of what I did earlier in my life, going to school for engineering, I like science and math. I knew engineers made good money and I could have a good living. I went into that. Again, the missed initial try into real estate development. I tried, but I didn't try hard enough. I gave up too soon on something that I thought I wanted to do. And I took a well-paying job in a safe kind of environment that I thought I would enjoy. But again, it was lower risk. And so going back, at some point, I decided that I wanted to get into real estate, and I bought a an apartment apartment, not a building. I bought one apartment in DC and have been renting it out since 2016, and that's gone fine. But there was something missing from a long-term rental of an apartment. And it was in early 2023 that I decided that I wanted to get back into real estate development. So between 2016 and 2023, I kind of got sidetracked again from my attempt at being an entrepreneur and going out there and having a real estate business. Family changing banks, got in the way. Then COVID, and here we are in 2023 when I'm finally back, have my head back above water, and I feel like I'm going to try this again, do something that I want to do. And this time was different. Maybe it was age, experience, confidence. I'm sure it was all of that, but I decided that this was the right time. And I came home from work one day. I told my wife I'm going to quit my job and finally start my own business. And she looked at me like I was crazy. I said, "Not now. I'm talking about like 5 years from now." And but I want to work towards that goal. And that's kind of when I went all in on real estate again. And I had to figure out what I wanted to do in real estate. So I went back to long-term rentals. And I thought maybe I would buy a small multifamily and build a portfolio of small multifamily. And I was looking at those, and this idea, it wasn't really speaking to me. And so I wasn't diving fully into it. And I came across the whole idea of short-term rental investing and short-term rental management. And that kind of caught my ear. Higher cash flow, a little higher risk, higher cash flow, but much more personal touch. But I thought something about creating that experience for a guest really sounded interesting to me. So I joined a mastermind group and I started learning that business. Along the way, I found out about the whole concept of a landscape hotel or micro resort, and that is where my mind kind of expanded to a point I didn't even know existed. So when I decided I wanted to be in the short-term rental industry, I bought a parcel of property in Berkeley Springs, West Virginia, and I built a frame home on that. At the same time, I bought another parcel of property that was 26 acres. That's a different property than the property that A-frame is on. And it was that situation where I stepped on the property and I knew I have to have this. It was, I could just see what it could be someday, and purchased it and immediately started figuring out how to develop it. What does it need? What does it need to be at some point? And what could it be at some point? And that's where the whole idea of the brand Branch, it was built. And Branch Berkeley Springs, the first property, first development that we're working on. The thing I love about this town in Berkeley Springs is that it is close to everything, but yet still so far away. It is less than 3 hours from Washington, D.C., Philadelphia, Baltimore, and Pittsburgh. So there are 20 million people that could get there for a weekend. And yet, when I walk around Washington, D.C. and tell people that I am building this property in Berkeley Springs, West Virginia, 9 out of 10 of them say, never heard of it. And that's where the light bulb went off for me, was that there are 1,000 towns that are amazing towns within a drivable distance of a lot of people around the U.S. And if they feel like I did when I drove into Berkeley Springs for the first time, this warm, welcoming environment, a beautiful main street, shops, restaurants, mountain, it's so different though than Washington, D.C. or Baltimore or Philadelphia. And so that's what drew me to this town, being able to build something that will attract people to come and experience nature, to have a place to get away, whether it's, for a weekend or a week, to be able to host, retreats for small corporate retreats, to be able to host larger gatherings. That's what we're designing, this property to be. And something that's very important to me because of how welcoming the town has been to me is to partner with the local businesses. So a lot of resorts will build walls, and either hypothetical, like virtual, not theoretical walls or actual walls, and they will want to bring you on site and have everything on site, and they make a lot of money doing that. But my whole concept is to partner with the local businesses to not have this plethora of amenities on site, like restaurants and spa on site. There are great restaurants in town. There are great spas in town. So I will have limited overhead type amenities. It will be great amenities for the guests at each home and also on site for them to enjoy, but mostly to just be in nature. And I'll partner with restaurants to bring restaurants in, or to have them, go to the restaurants in town. I want them to come and stay and get relaxation from being at Branch Berkeley Springs, but I also want them to go and experience the town and put their money into the town, because that symbiotic relationship is so important for both survival. And that's where this is going. And it's just been so much fun so far. And beyond Berkeley Springs, like I said, there's 1,000 towns. So like what gets me really excited is seeing this first one come out of the ground and open, and the idea of finding that next town that is a little bit under the radar, that hidden gem that's just right in the backyard of so many people, but they didn't really realize was there, and shining that little light that'll bring people there and have them discover, what I've discovered here. That gets me really excited.
Sure. Yeah. I'm going to probably ask you a couple more questions about that project and kind of where you see that, as a day. But before we get into that, I want to step back more into the psychology a little bit about the move. I think that you mentioned, there were a couple points in your career where you maybe could have taken that opportunity to jump off and start this journey sooner. But it was not until recently that you were able to finally make that decision and start making that plan to exit, and then at this point have exited that career to start on this. A lot of people in that position, right, that have this sense of safety. They want to keep a job. They have this view that the employer relationship is providing them with stability and the income and all of that. But they love to be able to go out on their own, whether it's short-term rentals or it's starting a coffee shop or it's going to be a ski bum in Vail, or whatever the dream is, whatever that other thing is. I think there's a lot of resistance, and it's kind of cultural, because obviously employers in some way want us to be scared of going out on our own, because otherwise, if everyone's an entrepreneur, nobody's working for everyone else, and it becomes a little bit challenging to staff companies. So could you speak a little bit to the psychology of that, and what do you think? You touched a little bit on it, but what do you think led you to being able to make that decision? Like, hey, I'm going to go for it. It's time. I've got what I need, whatever that might look like. Just spend a little bit of time there, because I think you can help, hopefully, some listeners get over that hump like you have.
There's so many different factors, and it's so, I think it's so personal. So it'll be different for everybody. But for me, it was all about having the confidence that I could try something and failure was okay. Early in my life, early in my career, the influences on me, understandably, again, back to my grandfather, who all he wanted for me was safety and security, because he had none of that. And you can't blame anybody for conveying that to somebody they love. And what his influence on me kept me to avoid risk. But that led me into banking and finance and engineering. And so everything happens for a reason. And that has led me to have experiences that have now given me the confidence to do what I want to do now. And so confidence is a big factor in experience and skills. Also, equally as important is having the support system around you to take those risks and it be okay. I mean, I probably did the riskiest thing I could do, which is wait until I was 45 years old with 2 kids and a wife and a mortgage, all of those things, to then say, now I'm going to take the biggest risk of my life. But for me, it was the having the foundation of experiences that it finally just clicked, and I said, I can do this because I've done other things that were hard and I've gotten through that. And also what I'm going to be doing next, it is a result of what I have done so far. And combining that with having a fantastic partner in my wife who entrusted me with our life savings to go start a business. Not everybody has that. So I feel very lucky to have the support system, the right time, in the right place in my life to be able to take that calculated risk to go and do something that I've always dreamed of. And so to directly answer your question, the psychology, of it is overcoming the fear. I mean, it's at any point, or wherever you are, whether you're 20, 25, 45, it is where is, what is scary, what is more scary, or what is less scary, and overcoming that fear of either failure from an ego standpoint, which is I don't know how to cope with not being able to accomplish something, to, well, what if this doesn't work? And what happens then? Like, what happens to me personally, or what happens to my family? And kind of addressing those fears head on, and having that system around you to get you past that is to me that's what's worked for me to take this risk at this time.
I think that well, although everyone's journey is separate and distinct and unique, the themes that you mentioned around, breaking through the fear of the doing it or the not doing it, having the support structure and the support of your partner. I think that is a huge factor that a lot of folks miss, that not all partnerships are on the same page around, their risk tolerance around, doing this, especially 20 years into a career where you've built all of this, this income and net worth and whatnot. And then you're like, oh, well, I'm going to leave all of that to start, what is not from scratch, but because you're taking all of those experiences with you in the new foundation. But from sometimes you can imagine it being almost like you're starting from scratch. And then, building all the confidence and the skills, right? The fact that you've done a bunch of other hard things that you can accomplish. And then I think one thing that you had mentioned that I think was great was, there's also the regret of not doing it, right? That's, I think, an important piece is eventually, the risk of not doing it is greater than the risk of doing it, psychologically. And you just, you're just forced to go for it. I think that's great. And, I hope that, more people will take that leap and break through that fear, because on the other side, there's a lot of freedom, of being able to do, what you want, pursue what you want. You spoke about, joining a mastermind group. I don't know, did that lead to additional confidence or skill building? How did that, come into play with your ability to make that decision, or to have that decision to move from your corporate career to this new business?
The return on investment of joining a mastermind group is infinite. I will say I would encourage anybody who is thinking about doing something that doesn't feel like they have the confidence or the skills, but they want to do something, just put yourself around people who have done it. And that's what mastermind groups are all about. So I have actually been part of 3 masterminds, going all the way back to 2016. I joined Bigger Pockets, which is a pretty well-known real estate related mastermind group. And that was my first kind of education in investing in real estate. From there, I actually learned about another mastermind group led by Rob Abasolo, and it's called Host Camp. And he was the one who gave me the confidence to go out and buy my first kind of individual short-term rental. And that was the A-frame cabin that I mentioned earlier. An interesting, quick, interesting story about the A-frame cabin, the way that all came together, is that I had an offer on an existing cabin in Berkeley Springs, and I thought that it was going to be accepted. I offered the asking price, and they were going to accept it. In the end of the day, they came back about 2:00 at the sellers and said, "We have another offer. So we by the end of the day, you can sharpen your pencils and give us a better offer." Well, that 4-hour window, I was actually at the house, at the property, meeting with a contractor because there was work that needed to be done. By the end of the 4 hours, with 2 hours with the contractor and then another couple of hours of thinking, I actually realized that I could build a brand new house for the same or less than I would have to spend in buying this house and then fixing it up. So I withdrew my offer, and then the next day, a parcel in the same community came up for sale, and I bought it that day, and I built this new house. Another thing that I've always wanted to do was build my own house and build something for myself. And so that experience was a great one for me because it helped me understand not to stretch, not to do something that doesn't feel right. It just did not feel right when I was sitting there in all of the work that would needed to be done. And it worked out. It just worked. It'll be 10 times better, the result, in being able to build my own house for the same amount that I would have ended up spending on that existing house.
Yeah. I think also you probably learned a lot about, about going from, doing the vertical construction. I know you had a construction background, but, just doing that and having that also as your test case, right? So going back to the current development, doing that first A-frame on that parcel was sort of like your beta, right? It's that, first project that gets you, all the pieces. It's the same amount of pieces, the same players, just on a different scale when you continue to do more and more projects. So, doing a renovation project on an existing property probably wouldn't have prepared you as well for the next phase, which is this, the 26-acre development project. I think there's a lesson in there, and that one, looking at a lot of deals is important because you get to see more perspective and relative value and, replacement costs and all the things that you saw, and then made a different decision based on that context of having more deal flow and being able to see more opportunity. But then, it sets you up for maybe even a better, next few steps so that you're better prepared for the next stage. I'd love to, we've got, just a few more minutes. I'd love for you to tell me a little bit about the vision for your 26 acres and kind of what you're hoping to, how many cabins will be there, or kind of just tell me a little bit about what your vision for that is. And you talked about kind of integrating with the town a little bit, but beyond that, maybe a little bit about the physicality of that project and where do you, when do you expect it to be completed, and kind of just a little bit more about that deal.
Sure. It's 26 acres. So I acquired the property in October of 2023, October 19th, 2023. I will always remember that day. We closed on that acquisition, and it has two existing homes, a 3-bedroom, 3-bathroom, 3,000 square foot main home, and about a 1,000 square foot guest house. The houses are, although well built, and the interiors are very spacious and open. They do have that cabin feel. They were original to 2000 and 2002. So the first thing I did there was actually do a full interior renovation of both houses. It was a $200,000 project. But to your point earlier, this was a great first step in that progression towards a large, full-scale development project, because I found a contractor, and he was able to do this major renovation, and we worked through that successfully. I learned a lot through that. He also ended up building the A-frame from the ground up. So even with the contractors, like, let's start with something that is a little smaller, even though $200,000 is a big project. And it was for me at the time, but it was not a full scale, $500,000 new build. And it certainly wasn't a multi-million-dollar full scale development of a micro resort. But building up to that, it was great to have him on board and to learn from the renovation and then the new build. Back to the 26 acres, we did the full renovation, and I actually designed the interiors myself with the help of an interior designer, but I was very hands-on. The reason I was so hands-on at the time is that it was cost, and I paid well below market for interior design, and then interior designs were great. However, it also taught me how much work is really involved. I actually considered doing an outsourcing of the design and purchasing an installation, and that was going to be $15,000 to $20,000, and I thought that was an insane amount of money to pay somebody else to manage that whole process. So I decided to do it myself to save money, but also to have the experience. One thing that was suggested to me and I learned was do something yourself before you hire somebody else to do it, because it will give you a great perspective on whatever you are hiring that expert for. And so this was a great opportunity to do that. So I was very involved in the selections and the design, as well as the staging. I worked evenings and weekends. I went up there on weekends. Again, the support of my wife and family to let me do that, to launch these first 2 rentals, dragged friends up there to put together furniture for days on end, a lot of beer and pizza as payment for that. And we launched the first 2 rentals March 8th of 2024. And the week before, I put them on the market to rent on a Monday. And I literally, my heart was racing, because even though they were so nice and I put so much into them and the feedback I got was great from anybody who had seen them, I still had the fear nobody's going to come. Nobody. And thankfully, within 4 hours, I had my first booking, and I relaxed a little bit. And then I woke up the next morning and I had 3 more bookings. And by Tuesday, they were fully booked for March. And I thought, okay, it actually worked. And so the confidence that gave me was really great to get over that first initial fear that, what if nobody comes? And they came. And they have come since then. So those 2 houses have given me a great base for the expansion, the A-frame as well. This area of West Virginia has not seen something like I'm building. So we talked earlier about market study. I'm doing my own market study by having these 2 houses and renting them successfully and seeing the patterns of rentals, who's coming, why are they coming, and these are very nice houses. They are higher end for this area. They are right in line with the top of the market. The A-frame new build that opened at the beginning of October, it is even higher end. So it's pushing the limits of this market that historical comparisons will be very difficult to justify. And so I am testing again the market myself to see, is this viable for the development? And the early indications of the A-frame fully support that a nicer, higher end accommodation, like we're going to build on the 26 acres, is viable. So I'm doing my own market study, gathering all this experience to build 9 more units on the 26 acres. And the pattern that I recognized from the 2 existing houses, which I'm going to implement through the development, is that larger groups will book both houses together. So I have them listed together, and then I have them each listed individually. Larger groups book further out. So book parties of the 2 houses can hold up to 14, parties of 8, 10, 12, 14. They are booking 6 months, 9 months in advance. One of those first bookings that I got in March was actually for somebody who's coming in November for a wedding, and they're having their wedding in town, and there's a whole wedding party is staying at the 2 houses, a small wedding. And they booked in November, and the bride was immediately calling me, making sure that everything was okay, and that it was going to be perfect, right? And so the larger parties booking earlier, as the party size gets smaller, the lead time to book gets shorter, down to the point where if I'm a single going to work from home, I might decide this week I'm going to go book. So I'm designing these new 9 units to allow for guests to book wherever they want to book, including, now expanding a little bit larger, is corporate retreats. I've had multiple inquiries already, just telling people what I'm doing and where it is because of the location. I've had multiple inquiries already about reserving the entire property for a retreat of 30 people, or a wedding potentially. And the units, the way they're going to be designed, are, again, to be rented as the entire property, if that's what the party wants to do, or the 3 houses kind of next to each other that can be rented as one for parties of up to 12, or each individual unit down to a 350 square foot kind of studio couples cabin that's very isolated from the other 2. A little bit larger unit that could be for 1 to 4 people, and then the largest unit will be from 1. You could, I guess, rent as 1, but mostly like 2 to 8 or so. And
then just the last question, as we're a little running out of time here, would just be, what's the, you're developing these next or 9 units. What's the timeline to get those live? Is that a staggered development, or are you building them all simultaneously, or what's the view there?
We're going to build them all simultaneously, primarily because construction costs just go up, as you spread things out. So the best thing to do from a construction standpoint is to build everything at once. Also, from the guest experience, to come on
construction ongoing. While someone's over there.
Yeah, when you're leaving the city and the noise of the city to go enjoy peaceful nature, and having construction happening right there is not an ideal experience. So, we are aiming to go to start construction in the first quarter of 2025, and it's looking like it'll be roughly an 18-month project. And so 2026 is our target, mid 2026, to open the doors and welcome guests.
Ian, you mentioned that your first instinct after your company kind of reorganized your division and that position that you had was kind of eliminated. Your first instinct was to kind of go all in into development. Can you just talk a little bit about how you shifted from that initial thought to realizing maybe the importance of having, to going back into the job market while also pursuing your real estate journey?
Absolutely. So my instinct initially was, as you said, to just go all in and build my real estate business and do that full time. And the reasons that I'm not doing that, I'm staying with banking, is primarily that in order to qualify for lending and to help grow the business, the real estate business on the side, that stable W-2 income is very important to potential lenders. And I've had a successful banking career, and so replacing that income for both a borrower as well as a support for my family it's just not the right time yet. And the interesting thing about thinking about it, though, is that there are so many there's so many influencers out there in social media, on YouTube, on Instagram, that are talking about quitting your job. Like people want to leave their W-2 more than ever, and there's all sorts of people telling them how to do it, or at least they think they think they know how to do it. And I fortunately have built up a good set of mentors and talking through this all with them, kind of laying out the reasons and the rationale of both decisions, whether to quit W-2 and also continue W-2. The overwhelming response I got, I was a little bit surprised that the majority of the mentors have told me, don't leave your W-2, stay with your W-2. All of that pressure and social pressure out there to quit your W-2 and go all in on your own business is more clickbait than anything else, because there's a lot of reasons to stay with stable income, especially at the income level that I've been able to build up later in my career. If it was if I was single in my, my late 20s and making, $50,000 a year, that's a lot easier to kind of replace than where I am now.
Yeah. And I can kind of attest to this as well, that I was in a position not too dissimilar from you, that I had developed a pretty significant income, and I did both as long as I could, and luckily to the point where I could get to the point where that real estate income exceeded the W-2, right? And it took a few years, right? And you almost have to work even harder, right? Because you got to do the normal job and you have to do the other business, and you've got to treat both of them with respect, and honor both of those commitments that you're making and the commitments that your employers are making to you. And so, but it is harder as that income goes up. That it takes a little bit longer to replace that income. It's not like you can just be like, I'm going to buy 3 rentals and I'm going to make it happen, and all of a sudden it's going to work out. You got to have to, kind of your rope swinging from one thing to another, but you want to make sure you got that next rope, held on tight before you let go of that other rope. So it makes a lot of sense. And it does point to the real estate mindset too, of like, downside protection, safety, things like that. Even though it's an entrepreneurial journey, it is still based on this principle of safety and real estate and how that works versus, technology businesses. So to definitely appreciate that mindset. While you with that response there, maybe you could talk a little bit about what it's like today searching for a job, right? Or what maybe challenges or opportunities did you notice as a job seeker who that would be valuable?
Sure. I've been very lucky throughout my career, timing wise, and I hope by saying this and putting it out there, it doesn't jinx me. But I graduated from undergrad in 2001, and of course in September we had September 11th, and then everybody stopped hiring. I already had a stable job, fortunately, at that point. I went to grad school in 2005 and graduated in 2007 with an MBA and an interest in going into banking. And then, of course, in 2007, late in 2007, the infamous Bank of America table of resetting mortgages was put out there, and that started the great financial crisis. And so I've been very fortunate in my career, and I find myself in a similar position today, where the bank that I was with is reorganizing and just has a different strategy and a different approach. And that's why I'm no longer there. This time, though, is a time of growth for almost every other bank. And so, again, very lucky that, this market, in this economy, there are a lot of places that are hiring. And I think it's going to end up in a very attractive situation for me.
Mm-hmm. Yeah. And now that you're, working back to then the juggle a little bit, like we just talked about, between this W-2 and the side gig, or as you're kind of building that, time management is super, probably important. Systems really important. Maybe we could talk a little bit about that. Maybe some books or other resources that have that you've been able to learn from, that have helped you be able to be successful in juggling these larger priorities and saving your time and being efficient, et cetera.
Yeah, the interesting thing, and it goes back to a little bit about what you were saying earlier about building up a business, becoming an entrepreneur while still having a W-2. What's the right time to make that jump, basically? And it's everybody wants to just have the business. Everybody wants to have the big real estate portfolio, lots of doors, and I was even a little bit susceptible to this when I decided that I wanted to become a real estate investor and build this business. I wanted to have, you want to have the end state, but very quickly, I think the people who are successful in getting to that end state realize all of the work that needs to go on before they can get to that end state. And that's where people either continue down the path or they go back and they give up and they go back to their W-2. And the reason they might give up is because they don't love the path. Like, you have to love the path in order to achieve the end goal. If you don't love the path, then get off of it, get on a different path, or go back to whatever path you were on before. Fortunately for me, I did initially say, I want to have a real estate business, and I saw the end goal. And then I started figuring out what the path was to get there. And so far, I have loved the path. And that's what gives me the energy to do it on the side. It is fun. I mean, I actually have fun. I wake up at 5:45 every morning and I jump out of bed because I get an hour to an hour and a half before my boys wake up, before school, and we hang out before they go to school. And then I go, to my banking job, and I love doing that. And then the evenings I come home and we have family dinner, and then I'm spending my evenings working on my side business, which is fun. I could be watching Netflix, or I could be, playing video games, but I am doing something that to me is even more fun. And that is, building this business. How I've been able to do that is building systems. So when I decide I want to do something, I just gobble up. I just consume information like crazy. And so whether it's YouTube while I'm on the Peloton, or audiobooks while I'm driving to and from my office, or reading books, when I'm in bed, I consume things that I think will help me. And the couple of things that have really stuck to me, are books like, the Robert Kiyosaki books. Those are classic. Everybody should read those if they want to have a business. Right now, I'm almost done with Cash Flow Quadrant, which is great. But building the systems to build a business, whether it's in real estate or anything, I have just this concept of the value in a business being in the systems themselves, as opposed to whatever the product you're selling. For an entrepreneur, for the business owner, the one who is orchestrating this business, it's about creating the systems that will be followed in order to generate the value, as opposed to going out there and selling, in my case, a vacation experience directly. It's better for me to design the system of how to sell a vacation experience and then pay somebody else to do it. So the two books that I have recently read that are really accelerating this for me, one is called Buy Back Your Time by Dan Martell, and the other one is called Clockwork by Mike Michalowicz. Mike Michalowicz is one of my favorite authors. I've read many of his books. And those two books, along with Cash Flow Quadrant, all similar themes around building these systems. Buy Back Your Time, it's right there in the title, but I literally have made the decisions over the last couple of months to make my first employee hire. And I didn't think I had the money, but then I realized the return on my time is so much more valuable than, the $1,000 a month or whatever that I'm spending on somebody to do some of the tasks that I don't jump out of bed at 5:45 in the morning to do. Building a business, there are so many different tasks. For me, especially having a W-2, I have to keep my mind and energy focused on the ones that bring me the most joy and give me the most energy and are also the highest value. So any other tasks, I have decided to try and find somebody else to do. So I'm building the system to help somebody else do those successfully. And one of the things that Dan Martell says in Buy Back Your Time, I just find a great way to think about things in a little bit lighter statement, is 80% of a job done by somebody else is 100% awesome for you. And so it's, a little bit the giving up the control, giving up perfection for your time. And that's something I've really learned to do. Now, with the time I have between W-2 jobs, I am spending all of my time outside of interviewing for new positions. I'm spending that time building these systems and building more systems. And so I've started to build the systems. Now I have time, and I'm super excited about this time I've been given to build even more systems, so that when I am back in a W-2 role doing that full time, that side business, I become less of the CEO and the president and the head of marketing and the head of HR. I become less of that, and become more of a shareholder. And that's something that Mike Michalowicz talks about in his book, is becoming a shareholder in your business and viewing yourself as a shareholder. And those are the kinds of things I'm focused on, right now for the next couple of months.
Yeah. Yeah. It's sort of a blessing in that it's really valuable to do that early. I think that you can get in this trap of growing the amount of hours that you spend, right? Okay, well, you're spending 40 and then 50, then 60, then 80 hours trying to work in your business and be the systems, be the rock star, clockwork. I think they have this concept of the queen bee. You're kind of like you're the bottleneck of the entire business. And so, and by starting with the systems early, you don't have to get into that mindset of just doing more yourself, and really thinking of that who, not what concept. And yeah, it's a super valuable thing. And I think that a lot of people get into this trap of doing so much work that then they don't have the space and time to build the systems. And they're sort of stuck in this limbo of doing a lot of work that they then can't offload because they don't have the time to build the system, find the person, train them, offload that product, because it does take a lot more time to transition the work and to build the system, et cetera, versus just doing it that one time yourself, right? You'll get stuck in this mindset of, oh, well, I'll just do it myself because it's only 30 minutes, but if you spend 5 hours, then you could get that 30 minutes back every week forever. And then you just pick up, 10, 20, 50 times that amount of time over the year. So really, really powerful. Are there any sort of, when you're thinking about systems, are there any pieces of technology or any other, anything else you want to talk about related to this automation, systems design, things like that, that's been helpful as you're building these systems now?
There definitely are technologies that I've implemented. Before I get to the technologies, though, I do want to tell you a quick story about systems, because just this morning I met with a friend who founded and grew a business to $100+ million in revenue. And I'm coming off of this high of reading these books and being all excited about building my systems. And I'm asking him about his business, and he's telling me, revenue's down. My wife's upset with me because I'm not present. My kids, one just went off to college, and I've got one in high school and a sixth grader. And it's I just, he's I don't know what to do. I might, maybe I'll sell. And as I'm listening to him, I'm just thinking about, man, this guy has built systems. You have to build systems to get to $100+ million in annual revenue. But I don't think he's built them with the intention of recovering his time, because he was telling me he's the best salesperson, of course. So the whole point of that is I'm starting a business, but as you said, starting it early, building the systems early with intention as well. So business owners build systems by mistake because it makes sense to try and hire somebody to do something so that they don't have to do as much of it. But I love this concept of starting at the beginning with building those systems intentionally, so that as you grow, you don't end up in a place where you now have to build the systems. It's so much easier to build them from the beginning and have a culture of building systems than it is to do it later and try and course correct, when you get too big. I was so excited. So it does take time to build the systems. However, there's even a system for building the systems. So I was so excited. This is a small win just this week. I recorded myself doing a task that I was going to hand off to my virtual assistant. And for the first time, I recorded the task, and then I just sent her the video, and I said, part of your task is to watch the video and then write the system for that task and put it in this folder. So this again was a buy back your time kind of tip. And sure enough, she watched the video, wrote the system, put it in the folder. So now I even have a system to write systems, or to create systems. To your point about technology, there's so much technology in real estate, and even in my small sliver of real estate, in that experiential hospitality portion of real estate. And there's a lot of money going into being invested in these technologies. So the things that I can do today that allow me to do this while having a full-time job, basically doing this as a hobby for now, are things like, it starts with the property management software. And there are 10 plus property management software specifically around short-term vacation rentals or hospitality. And that is the hub. And then you have a bunch of different softwares that plug into that. And so you have softwares that help organize a cleaning team and give cleaning checklists. So again, another system is actually having a good checklist so that somebody new can pick it up and just do the clean with reference photos, all of those kinds of things. And it all ties back to the booking and the reservations. So those tasks are automatically generated, automatically sent to the team, automatically paid upon completion. There's software that helps with pricing. And so much like many people know, like the airline pricing, where you look at a flight and it's different every time you pull it up. Well, the reason it's different is because they have a software behind that senses demand, and it senses what seats have been sold, but it also senses who's searching. Well, that is now a thing in hospitality as well. Hotels have had it for years, but in the last few years, it's now come to kind of smaller businesses like mine in the individual vacation rental space. And the list goes on as far as software goes to manage this kind of business. And it wouldn't be possible. It wouldn't be possible for somebody of my size and at this point to be able to manage all this if it wasn't for the growth of software to help manage it.
Mm-hmm. Yeah. I mean, it's amazing what. Yeah, you almost have the same level of technology as a Marriott, right? You have those same functionalities, the same ability, right? So you can be a smaller operator, smaller labor force, but be able to execute at a much bigger scale and provide better customer experience, right? And just get a lot of administrative tasks off, not just your plate, but anybody's plate, right? Because the software is essentially handling that and has eliminated that as a necessary administrative task. So, and it's all auditable. So you can kind of, see what's going right, what's going wrong, and have transparency the data into the ground game, like, you may not have had before, right? Maybe you would have had to go to the property, let the cleaner in, watch them do the work, right, for the first time, and then trust them in the future that it was always going to be right, or have to go back to the property once they were done every single time to confirm their work, or have someone else on your team do that. And so just that alone, right, the savings of time and money there, I think it can't be understated. And that's just obviously one of, dozens of discrete activities that need to get done in the short-term hospitality space, where customer satisfaction and is super, super important, right? It's all built on getting great reviews, having great experience for your person that's staying and your guest, right? So really powerful stuff. So anything else that you want to talk about as it relates to your shift out and then back into the W-2 world? Anything you want to leave the listeners maybe in a similar position where they're maybe they're in their 2 weeks, right? Where they're, their last 2 weeks, where they know something's coming and they're trying to make a decision around, hey, am I going to immediately go after another job? Am I going to finally pursue that, dream? And then maybe that's not a binary decision, maybe, right? But you can maybe have the best of both worlds. Maybe you could speak a little bit about that before we wrap on this topic.
Yeah, absolutely. I mean, it's, somebody told me once, when you're young, you've got time, but you don't have necessarily the experience, or the capital to start your dream business. But then as you get older, you maybe have some capital and now you've got some experience, but then you don't have the time, because maybe you have a family, which, a lot of people do, and that's great. So, everybody's different and every situation is different. Making that leap, I think media has sensationalized a lot of making that leap. A lot of people, see things social media today that you can quit your W-2, replace your income. And, in some very specific cases that can be done quickly. However, in most realistic cases, it's just not possible. It's just not possible to make that leap so fast without really, putting in the work. Like I said earlier, you have to have an end goal, but you really have to put in the work. So you can put in the work and start down the path and understand what the path is. And if you love the path, you can continue to do it while you have a W-2 to the point where you're making a calculated risk to leave that stable income and go do something else. Like the best advice I can give myself 20 years ago in order to achieve what I'd like to achieve earlier or even now, the best advice I can give my, 25-year-old self is don't be susceptible to overspending. Like what happens is you get a job, I did this myself. When I first got my job, every month it was paycheck to paycheck. Why? Because I wanted a car and I wanted the nicest apartment I could have. Well, if you have a goal to have your own business someday, don't get the nicest car. Don't have the nicest apartment. Make sure you are saving. You are basically investing in yourself at that point and investing in your own future. That is the biggest gap where you get a job, you spend the money, you get a raise, you spend that more money because now you have a raise, and you just keep building up your expense base, and those are all liabilities. The best thing you can do is live under your means until the point where you can take some of that capital and and invest in yourself and start your own business.
Yeah. Well, that's really great advice. Really hard to do, right? Because you're bucking the trend there, right? And you're going against social convention. You live in a consumerist environment, kind of mentality, and but it's absolutely true. But you're existing in the against the grain, which can be difficult, right? Your friends are going out to the bar on Friday, Saturday, Sunday, and or whatever, right? You're in your 20s. You finally are free and have some disposable income to make that decision to buy that 10-year-old Honda Accord versus the brand new whatever. It's a tough decision to make, but yeah, it definitely puts you. You go 15 years into the future, and the compounding of the habits that you built of living below your means, and then just the capital that you can accumulate by living on 60 cents of the dollar, right? Because every month that you live, you're saving almost a month of expenses, right? And so you work a month, it's 1 month for the man, 1 month for you, right? And so then you're a few years into your career, and all of a sudden you've got several years of expenses in the bank. And that gives you a lot of flexibility to pursue the jobs that you want, take a year off and go and explore the world before you do have a lot more responsibilities as they come as time goes on. So it just gives you the flexibility, but I don't think it could be overstated how that is a difficult path, and but one that does pay huge dividends.
For sure. It's a difficult path, and you said bucking the trend. It is definitely bucking the trend, but I would say entrepreneurs buck the trend all the time. Like that is part of being an entrepreneur, is bucking the trend, because you have to find something. What are you going to bring to this world that somebody else either isn't bringing, or you're going to bring it in a better way, which is the definition of bucking the trend. But for everybody, it's different. Like I don't have any regrets of not doing this 20 years ago, because everything I've learned in my construction management career and in my banking career and in my life, even with my family, and being able to travel, like all of that has led me to this point. So it's not regret. It's not regret, and it's not saying that I would necessarily do something different myself. But I would say, in the back of my mind now, did I really need, to spend $400 a month in that car? Would it have been okay with $300 and take that 100 and, and put it off to the side? That's the thing that I would do differently. But definitely, people shouldn't get into being an entrepreneur just to be an entrepreneur. They really have to have reason and energy around what they're doing. And I think the most successful entrepreneurs are the ones that don't necessarily even do it for the money. They do it for the satisfaction they get out of whatever they're doing, building something, creating something. In my case, giving, people an experience and bringing travelers together in a place that I think is very special.
Mm-hmm. Yeah. Awesome. Oh yeah. That was special. I remember when I was, when I left, I came back after college and I came back home and lived with my parents, which at that time was not as in vogue as maybe it is today. But I just 12 months living at home, not living in New York or, whatever. And then not having a car because I happen to live close enough to the train station. I could walk to the train station, take the train in. So I just had that monthly pass obligation and then basically no other expenses, working, in finance. I was swimming in it, I had lots of cash and just, you don't realize it, but very quickly that grows. And then, of course, bought engagement brings my wife, it's like, and it's like this and that. And then you're like, oh, well, you got a big cushion. And it's money, the money goes pretty quick. Once you start spending it, it goes how fast. You can spend it faster sometimes than you can make it, and save it. So, definitely. I would have, if I had done that for a few more years, it definitely would have put us in a position, a little bit of a different position. Maybe bought a house a little earlier, maybe invested a little earlier, maybe made different career decisions, early on. So, but similar to you, don't regret anything and how my life has turned out. But there's always room for improvement, which I think is part of the entrepreneurial mindset. Is like, oh well, nothing's ever good. It's a little bit like nothing's ever good enough. It's like where can I see the edge or fault, and then try to improve on it. So so
one thing I love about real estate is it's kind of a way to hide my money for myself, because you can't exactly go down to your house and pull out $1,000 to spend on dinner. And so when I finally did have some capital, I was like, I'm gonna this is a great way to keep myself from it, keep me from myself, and put it in real estate.
For sure. I mean, that's what I guess I'll plug in. Grant Cardone is not, is definitely a colorful character. He always talks about how he's always broke because he'll accumulate cash and he'll just throw that cash into buying real estate. We just have that mindset of never having any money. Any money that you have belongs to, the future generations or to your business or to real estate. It's not about, and then you take the money that you make from the real estate, and then that cash flow, is the money that you can use for discretionary spending. If you want to go out and get a, like a Rolls Royce, or whatever, Grant does. So, yeah.
In the business building mindset, I since I've started doing it, it has changed my perspective entirely on spending money in general. I mean, even to the point where now I have, do I want to go enjoy my beautiful, A-frame in West Virginia? And I look at the calendar and I see the dollars and I'm like, do I want to spend these 3 nights, or do I wait for somebody else to book it and pay me $2,000? Like, I'm looking at it now as like, I'm paying, I thought when I first did this, I thought, oh, this will be nice. I'll be able to use the house. And I still want to be able to do that. But I still look at it as I have to pay $2,000 to go use my own house, because if I don't go use it, somebody will give me $2,000 to use it. Like that. It's good and bad. I mean, it definitely turns you into, having a different mindset. And my wife and kids remind me all the time that we can still, go on vacation. We don't have to invest every dollar into our business.
Ian, thank you so much for your time and for sharing some great insights and knowledge within the real estate space. If listeners wanted to get in touch with you, find out more about you or some of the projects you're working on, what would be the best way for them to do that?
The best way to reach me is through Instagram. I am at @StayWithBranch on Instagram, or can email me directly, which is ian@staywithbranch.com.
Awesome. Thank you so much. And we'll make sure to put that stuff in the show notes for our listeners, make it easy for them. So great. Thank you for tuning into this episode of Deal Flow with me, Michael Pulio. Don't forget to give the podcast a follow on Apple Music and Spotify. Subscribe to YouTube so you don't miss an episode. And of course, if you feel like someone else would get something out of the show, please go ahead and send it across to them. Feel free to comment below with regards to future guests you'd like to see on the show, or get in touch should you think that your knowledge and expertise would make for a great episode. Thanks again for me, and we'll see you next time on Deal Flow. Thank you for listening to Deal Flow with me, Michael Pulio. We hope you gained valuable insights into private equity real estate and market trends. Stay tuned for more expert discussions and updates on the latest in commercial real estate and structured finance. Don't forget to subscribe, rate, and review on your favorite podcasting platform. Join us next time for more high-level conversations that empower your investment decisions and your operating results.